Hello and welcome back to another 10-minute investor eye test with Arcanum Ventures. I'm Carmelo and this is my good friend and colleague Sasha. And today we're going to be checking out Plasma, a high-performance layer 1 blockchain purpose-built for stablecoins. Sasha, I think they just raised like $373 million on Echo, or they were oversubscribed by that much. But do you know anything about Plasma or what they're doing?
Uh, I I know Plasma is a blockchain that's built for stablecoins. Like you said, we covered it in our three token launches video this week, and that intrigued me just by itself because I know that stablecoins are maybe one of the most interesting aspects of this industry. They have been, and now they're becoming more and more interesting because of an institutional push. So building a blockchain specifically around stablecoins, it seems like a good business move. I didn't know that they raised $400 million. That's wild. Like, for what and how?
Yeah, I don't know how much they actually wanted to raise or tried to raise, but I think they oversubscribed to 370 something million dollars. So obviously it was very hyped and people wanted to get in. And I've been hearing about Plasma for ages. And ironically, stablecoins are probably the least innovative and most boring thing in crypto, but they're the biggest money makers. So it's this weird sort of dichotomy there.
Well, they were innovative for a time until all of the algorithmic stablecoins cratered. There was some cool innovation there, but they all failed.
Yeah, I guess over collateralized or collateralized stablecoins aren't anything that mind blowingly new, but a layer one entirely built for stablecoins sounds kind of intriguing. I don't know if this needs to exist. I think stablecoins they work perfectly well already on other chains, especially like
Yeah.
you and I always joke about Tron being a remittance chain purely for sending your family money in other countries, stablecoins. So, do we really need a purpose-built layer one only for stablecoins? I guess that's what we're going to find out today. What the Plasma, I think it's the XPL token, does. We're going to take 10 short minutes to figure out, does this token need to exist, and therefore is it a decent investment? Are we actually going to get exposure to Plasma and all the money they're probably going to make with this infrastructure if we invest in the token or hold the token? So these are all things we want to check out today in the next 10 minutes, and then we'll give our assessment at the end of that 10-minute period.
Yeah. So if you're ready, we'll dive in.
Yeah, I'm ready. Let's check out Plasma.
10 short minutes on Plasma, starting right meow, boom. And I've got crypto rank up here now. And this is kind of like giving information on, I suppose, the ICO that ended yesterday or the day before. But
Yep.
yeah, they've apparently their target raise was 50 million, it says here. I don't know how accurate that is, but I do see some notable investors in this cap table. Hmm.
Yeah. 6-man founders fund is tier 3. I don't know how they came to that conclusion. Some impressive angel investors there as well. Wow, Peter Thiel. That's
Yeah,
crazy.
you got Cobie, you got Bybit, Bitfinex is a lead. Framework Ventures, another lead. Yeah, this is an impressive cap table, and it's not a cap table that is like traditionally Web3 or crypto or degen, right? This is like a cap
Yeah.
table that's a more serious company. Founders fund, like they don't mess around.
Yeah, and I'm wondering like what percentage of that 50 million they tried to raise was from these pre-sale investors and how much they actually raised on Echo. But here it's saying 50 million on Echo. I think Echo is where they raised well over $350 million oversubscribed. So maybe they're going to return all of that and they're going to honor the first X amount of people in there, which is pretty crazy to see oversubscribed ICOs right now because I thought those were dead. But I guess those really hype projects are still here.
Yeah, it begs a lot of questions, right? Like, I think a lot of companies have struggled with token launches lately, and it just goes to show like what's missing in the secret ingredient. Like, do you need the backing? Do you need the connections? Do you need the launch pad? What is it? I see
Yeah.
here, the Series A with a lot of these notable investors, that was 20.5 million earlier this year, which is wild. Like if you talk about time between fundraising rounds, it's not a lot of time, especially compared to this previous undisclosed round, which was maybe 4 months prior to that. But yeah, it says here that the token valuation is 500 million. So how did they sell 400 million of the token?
That's a great question. And I think, like you said, it depends on who you have on the cap table, what launch pads you're engaging. Seems to be like Echo is a pretty solid bet to have a good launch, but I wonder how, stringent they are on their what you have to be able to list with them. I think you have to be really promising. So we're seeing more launches from Echo, but I'm not sure what their criteria are for launching. But yeah, it looks like $75 million, just about 74 million, has been raised in total.
Plus the 300 million that they brought on board. And I just want to make a note. Maybe I'm not 100% sure how Echo functions, but it might be sort of like a maybe like a copper launch. Like there's a bonding curve involved where the more demand, the higher the sale price goes up. But I guess we'll find out in another video. But yeah, they've raised, according to this, close to 420. I'm sorry, $450 million in most likely equity and token, which is wild.
Yeah, I mean, I don't think they took all that money. I think that's just oversubscribed means they're going to return it or not accept it. But it's still,
Oh, okay.
yeah, it's still crazy though. Like you have to imagine that if you return $300 million worth of capital that was meant to invest in it, then that's going to go to that's going to fuel the buy at launch. Like there's going to be people that want that demand is going to be created from day one, which is what you want. If you're launching any sort of asset with the launch pad, the hope is that the people that didn't get it, like they missed out on an opportunity and therefore they're going to try to buy it off the open market, which is like what we wish every launch looked like, but it's usually not the case. It's usually everybody wants to sell at launch.
Yeah, I mean, same principle with IPOs as well. You hope that like once
Yep.
you give access to that retail public, they're going to want to buy in. But let's shift over to the website and see what this company is about. And already, this is an extremely beautiful website. I like the way it's kind of laid out, and I like this call to or this hero text as well, redefining how money moves.
Yeah, I wonder
Beautiful.
where it is and why it's here. I don't know what it has to do with stablecoin infrastructure, but it does look beautiful. I like
Hmm.
really clean, nice, crisp, beautiful looking designs like that.
Hmm. And what we've got here is some more information. Plasma is a high performance layer one built for stable coins and it's designed around stable coins from the ground up. I wonder if people are going to be able to launch meme coins on this.
I was just thinking that, like, imagine only stable meme coins, like
Oh man. But there's
stable
zero
dollar meme
fees.
coins.
That's kind of like their call to fame, right? 1,000 transactions per second, which that's not great compared to what a lot of EVM compatible new blockchains or novel blockchains are coming to market with. A lot of them are touting like tens of thousands, maybe hundreds of thousands of transactions per second for high throughput and scalability. But here you've got 1,000 transactions per second, block times less than 1 second, and $0 fees. And this is actually kind of perfect for stablecoin transactions, right?
Yeah, I mean, I don't think you need much more. But that being said, like, I think Visa or Mastercard can process like 60,000 per second. So I don't know how you're going to really innovate or do anything. Yeah, it's on blockchain, but what are the other use cases for being on blockchain, aside from like improving on the traditional finance ecosystem? But yeah, it is interesting. Like, I wonder how they're making money if there's zero transfer fees. There's got to be some other way. There's got to be a reason why all these investors are on board. Like, what are we making money from?
Yeah, hopefully we figure that out. Like the scalability is definitely an issue if you're talking about trying to compete with some of these legacy payment infrastructure solutions, and like global scale. I hate degen based predictions, but like I could see like some company trying to launch some plasma L2 and launching a token for it. That would be awful.
Yeah, wouldn't surprise me. I don't know, but it has some of the worst people on here, highly involved with the government. So I'm sure that they have all the odds stacked in their favor. They're going to have like an easy path with no barriers to become the network. Probably that's my degen speculation.
Check this out. It says they've got 1 billion in stablecoin deposits, which is a wild number for taking a blockchain to market, right? I know we were talking about Blast, sourcing, what was it, like 700 million
Yeah,
in TVL. They've got more than that, which is kind of wild. I wonder where it's coming from. It's not from retail, that's for sure. If there's anything this industry taught us, it's most likely coming from some institutional players. But they support 15 stable coins. They're the sixth network by USDT tether balance, and they haven't
hmm.
even launched yet. That's
That's pretty
crazy.
crazy. Yeah,
Yeah. Well,
but
nothing on
again,
tokens so far.
not just that, but like, what are their revenue generation mechanisms? Like, how is Plasma making money? Is it? I mean, and also, yeah, how does the token slot in? Because maybe it's something to do with the token.
If they're just making money off like selling the token, then it's obviously not a good investment. But it is concerning, like that they've got $1 billion in TVL for a stablecoin protocol, and they're taking zero fees. So there's zero B2C business model. Does that mean that they're going to be selling user data? Does that mean that they're going to be, taking a look into people's private financial lives? Like this is a little bit concerning all of a sudden, right?
I mean, the only other thing I can think of is like accruing yield for the underlying collateral, but it still doesn't really tell me what the token does and how the value goes to that token and not just the company.
This is true. Like one of the things they could do is take all that collateral and money manage it and develop maybe like conservative yields, 3-4%. And 3-4% off $1 billion is a lot. So like maybe that is what they're doing. It's we'll give you the infrastructure, but we make the money off of your collateral, just like banks. And we know that that business model works.
I don't know if 3 or 4% would be enough for this though. Like $1 billion and I don't know all the backing and $300 million trying to be invested in this. Like you would think that
Mhm.
there's something more to it, but they have native Bitcoin bridge, Plasma BFT consensus layer, EVM execution layer. So there's a way to bridge to Bitcoin. Maybe they get money off of like the bridging aspect of it.
Maybe, yeah. There's got to be fees somewhere, or there's some sort of like B2C partnership. I see card issuance here, and that might be a big part of it, where they're taking a fee on like consumer purchases using like credit card systems that tie into their blockchain. So that could be a part of their business model, but I don't see a whole lot of like solid evidence on what that business model could be.
Yeah, and I wonder also if zero fees just means for the user. Like maybe companies that integrate it or build around it need to pay a fee still, like a B2B to C fee.
It's a very good question, right? But again, here it's like there's zero there's zero gas fees, lightweight identity. It's ZK, scalable blockchain they claim, and so we still don't know how they're making money. One thing that we
Wait,
didn't do. Go ahead.
yeah, go back to that other thing, back where you just were. Do
Yeah.
you see right there? Plasma offers a protocol maintained ERC20 paymaster that allows approved tokens to be used for gas payments instead of XPL. Projects can register stablecoins or ecosystem tokens to support gas abstraction in their applications, which is interesting, but it's still fee free, and it just robs XPL of one of its classic utilities that it should, in theory, have, but it's not there. So yeah, we still have no idea what it does.
But at the same time, that's kind of like a bait and switch, right? Because they're saying that the protocol allows maybe the merchant to charge fees, and maybe that's part of their business model. But there is some method of charging transaction fees. Basically, what they're saying is that transaction fee is not going to be in the fungible token, and that could be on
Yeah.
either side. So it's kind of like using one tiny crappy feature but marketing it as like completely fee free, and I don't know if that's what's happening, but it's not a good look.
Does it say anything for the tokenomics there? I know we're over
It's just
time, but
Yeah, I was just about to check, but it does say here Plasma's paymaster is scoped, audited, and fee free. Okay, so there's obviously way more to dive into here, but let's talk about the tokenomics real quick. And so we've got the distribution here, emissions, and then
no
a validator
validator.
network. Yeah. So obviously, it's a blockchain, proof of stake, blockchain network, and the token is used for, let's say, network validation. and for securing the blockchain and helping the blockchain operate in a censorship resistant fashion. So that's like a tier one type of use case.
Yeah.
And that's it. Seems to
Inflation
be it.
schedule. It has a finite supply though, right?
Yeah, it has a finite supply according to this chart over here and according to the tokenomics. And so, inflation schedule, maybe this is some information on how tokens are being released. And it looks like a lot of them are just kind of like being released in some um, inflation reducing manner, which is interesting. That might be tied to their business development strategy or expansion plan.
Well, it says
But
it'll go down to a 3% long term baseline, so it's gonna bottom out at 3% and just stay at that number.
okay.
Uh, yeah, proof of stake blockchain still doesn't tell us much about like how does this company make money? Like, are they just gonna maintain? Uh, I mean, they're gonna have a huge chunk of the supply to stake, I guess, and run validators themselves. But is that it? Like, they just make money off their own protocol and then retain a large chunk of the token supply?
It's a really good question, right? Because there's not enough information here about XPL. And this section here, understanding XPL, talks about like high level vision. Our goal is to bring trillions of dollars on chain. XPL is the core asset of securing the system. It's the native token of the blockchain, facilitates transactions. All of this stuff could have been written by ChatGPT, and it
I
probably
think,
was
yeah.
because that's like the type of stuff that it writes when you say, I need information on how a token works with a blockchain.
Did
So
you see this line? This line right here: XPL is similar in these ways to Bitcoin on the Bitcoin blockchain or Ethereum on the Ethereum blockchain.
yeah,
That is a
that's
nonsense, nothing sentence that doesn't need to be anywhere.
thanks ChatGPT for that one. We are way over time, so let's wrap this up. Oh man, there's so much to dissect here. You want me to go first? Or you want to go first?
Yeah, yeah. You go ahead.
Okay. I don't know. I don't know what to say. Uh, so, um, what's the business model? Why were they $400 million oversubscribed? Why is Peter Thiel investing? Why are all of these? Why is Founder Fund investing? All these players understand that stablecoins are the future, and they've carried blockchain and crypto through the last number of down years, and they're going to continue to be relevant because, of course, we're moving towards a more digital global ecosystem, and of course, in 50 years if you don't think there's going to be some one common global currency, then you're crazy. That just makes sense, right? Stable coins are providing like the foundation for that. I believe that that might be enough to get some of these people to invest if they're fed some sort of vision. But I don't see any tech innovation here. I don't see anything that clearly defines a moat. And I don't know, what they plan on doing with this infrastructure because it's just not clear. It's just like, hey, invest in our company because we're all about stable coins. Go stable coins. And yeah, it just doesn't make a whole lot of sense to me. There's nothing around the business model. But knowing that Web3 and crypto, sometimes you have to assume the worst. I would say that maybe they're being misleading about how transaction fees are being applied to this system. It's going to be somewhere because guess what? USDT is an extremely profitable company because of transaction fees. No one's going to launch stablecoins or stablecoin infrastructure without transaction fees. No investor is going to buy into that. That's why they're interested in stablecoins right now, in amongst a host of other reasons. And then secondly, like if they're a purpose-built blockchain for stablecoins, they're going to have a lot of very valuable user data and information. And if you know what people are spending money, what they're spending money on, then you have a very clear idea of what their lives look like. And so that data is very valuable in the right hands. So I'm not really sure what to think. And despite this very negative kind of like verdict from my end, I will give it one thumb up simply because I'm interested in learning more before I say like hard no. So that's my verdict.
That's fair. Yeah, I think you brought up some good points, and another thing to add there is what is wrong with stablecoins already? Am I missing something? Is it broken? And also, they're integrating these stable coins. So, how are they getting Tether and Circle to play ball and join their network without pissing them off and stealing their market share or threatening their way of making money? Right? Like they has to make sense for both sides if they're going to be working together. And ultimately, I disagree with what you said about the moat. There might not be an innovation or a tech moat here, and that 1,000 TPS is not that impressive, but they have a huge moat that maybe most wouldn't consider a moat, but I do. They have Scott Bessent and David Sachs and Peter Thiel investing in it. Peter Thiel, the guy behind Palantir, who's the biggest data warehouse imaginable. And like you said, they're going to have access to financial data, maybe. Like, why else would Peter Thiel be interested in this? The stable coin, the Genius bill was just passed, like, what, not even a week or two ago? Pretty nice timing for these guys. They have little to no resistance to launching this and making a bunch of money because, it's open season for grifting, basically. So I think there could be something to this. It could be an interesting play. I wanted to avoid giving it a thumbs down because I don't love it and I don't see a lot of technical innovation, but I do want to learn more about it and see what we're missing because there's obviously not enough information in 10 minutes to ascertain what they're actually doing to make money. So I'll give it a thumb sideways. I'd probably look into it more, to be honest, but I don't see innovation and it's not a whole lot to be excited about. Like I said, what is wrong with stablecoins right now? I can send you stablecoins. I can send you USDT, USDC, any number of stablecoins right now instantly with minimal fees, maybe even no fees, depending on the network on Solana. So do I really need this network? I don't think so. Are they even equipped to handle high volume for institutions? Currently, no. With 1,000 TPS, you're going to get like circles run around you by traditional fintech companies. So I don't see a whole lot of innovation here. I don't know what the excitement is about. And I don't know why $350 million were poured into this. Maybe it's just Echo and Cobie and in the hype around Founders Fund or Peter Thiel and getting some legacy investors and TradFi people into this. But otherwise, I don't see a whole lot. I don't know.
Yeah, it's a good point. I think they seem to be taking more of like an institutional partnership approach. They've got a link for a Miko white paper there. So, like giving this perception of like compliance. But yeah, at the same time, like maybe they're thinking more long term about account abstraction. If you have a blockchain that requires no gas fees, then you don't need to onboard or educate people into like, when you start a Solana wallet, have a friend send you some Sol. Like that's a huge barrier in and of itself, just to be able to transact stable coins at a fraction of a penny. It's irrelevant because people still like, they have to take some action that doesn't make a whole lot of sense to them. So maybe it is like an account abstraction play. Maybe it's a long-term play, but it's decentralized, which is strange if you consider like, I don't think people care about that. They just want things to work.
Yeah, like I doubt it's like censorship resistant, despite its proof of stake is not so decentralized. We're not able to make it so decentralized. Like based off of what I've seen, it's still a VC coin that launched a bunch of like $40 million, $50 million. So let's see. I guess I'm excited to see what happens nonetheless. It's an interesting thought experiment, and we'll have our team look more into it, how they're actually making money and what that looks like for the XBL token. Because if we ever get tasked to design a token like this, then it'll be interesting to learn from the experience of what this team has managed to do. And does this thing need to be existing especially in an age in 2025 when it's never been easier to launch a roll-up or a blockchain? So yeah. Does this team need $70 million to do this? I don't know. Anyways, we could talk about this endlessly, but this has been 10 or a little bit more than 10 minutes in the books for Plasma. Regardless, best of luck to the team. Big launch coming up or already happening. Please like and subscribe if you like this content, or tell us why we're wrong. We've got it all wrong about Plasma, and we'll hope to see you next week for another 10-minute investor eye test. This is Mello and Sasha tuning out. Bye, everybody.
Ciao, yo.